Hey, good morning everybody, this is Henry. It is 9:34 a.m. the 24th of September 2009. In about 25 minutes we're going to get the US existing home sales number, the month-on-month existing home sales number. The forecast on the number is 5.36 million with the previous release of 5.24 million. Now what we're going to be looking for is at least 0.4 million or 400K of deviation. So in the event that we get a 5.76 million, it's going to be good for risk appetite and good for US dollar. So we'll have to wait and see which direction the market is going to take, and possibly we'll be looking to buy the dollar yen or the dollar Swiss franc. Now if we get a worse than expected number around the area of 4.9 million or worse, it's going to be good for risk aversion and pretty much bad for the US dollar. And once again, it's going to be a battle between risk sentiment and the fundamental outlook of the US economy. So we have to really wait and see how the market is going to react, because we know the dollar is considered as a safe haven currency. And for safe haven currencies in a risk aversion sentiment market, most likely the currency gets in very high demand, and in a risk appetite market, safe haven currency actually gets sold off. So we do have two conflicting ideas, two conflicting drivers in the market with this news. So it will be interesting, and obviously because of that we are definitely going to be looking for a retracement trade. There is going to be no pre-news trade because we really can't predict what the market is going to do. We can pretty much guesstimate what is going to be the primary driver, but whether it will be the case after the news release, nobody knows that for sure. So anyways, the tradable deviation that we're looking for is better than 5.76 million or worse than 4.9 million. So those are the two tradable deviation. Once we get a deviation, we'll look at market reaction, the initial market reaction, and then if we do see good market reaction, we will then look for a decent retracement to jump into the market. So once again, we're looking for 400K of deviation, and once we get that, we'll decide what to do next. Now if we don't get our tradable deviation, it's probably for the best to stay out of the market, because it really makes no sense to be in the market when we don't have a predominant driver, and that would be like flipping a coin, not knowing what the future is gonna be. And for the reason why we trade the news is that we have the odds stacked with us instead of against us. So that's basically the plan. Right now, coming about 22 minutes for the news release, we will look at this number live. I will record the trade, and hopefully we'll be able to make some pips. Thank you. Okay guys, coming out in less than 2 minutes for the release. Once again, we're looking for 5.76 or better, or 4.9 or worse for the release on the US existing home sales. So those are going to be our number.
Just over a minute to the August existing home sales expected 5.35 million units. The estimates range between 5.1 and 5.55 million. The prior month was at 5.24 million, which was the highest reading since August of 2007.
Obviously, on a better than expected release, I think Euro Yen will be a good entry to go long, and on a worse than expected release, then maybe the Pound Yen will be good to sell. Judging from the way that the market has been reacting to the sterling, might see further weakness in the sterling.
August existing home sales in just a few seconds.
So coming up in just a couple of seconds, 10 seconds.
5.1 million, and 5.1 million down 2.7% from the prior month, which is unrevised. It's below the 5.35 million expectation. The median price for existing homes, $177,700. down 12.5% from August of last year.
Okay, we got a little bit worse than expected, but not seeing any kind of market reaction after the news. Very little initial movement, and
Fed saying they're further cutting size of TAF and TSLF credit aid through January to offer $75 million per 28-day auction through January. Fed remains prepared to expand liquidity.
Just to recap this number, we have no revisions for the prior number. We got a 5.1 versus the 5.36 that we were waiting for. The median home prices for the existing home prices is 177.7K, and the expectation was 178.4K, and basically we're looking at negative 12.5% of loss on a year-on-year basis. Basically, we're not getting a tradable deviation, market not giving us any kind of reaction. So I think what we're going to see is some reversal because of 3 sessions rule and the market cycle, as the market has been waiting for this number to get out of the way before investors would just jump in and start to take a reversal trade. So it is likely that we'll see some reversal in the sterling right now. Some reversal is possible for it to come back a little bit. And overnight we saw some weakness in the CAD, Canadian dollar, which has been waiting for that for quite a while. Seeing the CAD now testing the 108.14. So basically I think we might see some market movement, volatility, but don't think that's attributed to this news release. If anything, traders once again were just waiting for this news to come out, and with hopes that they won't get blindsided by it. And if the news does surprise the market, that they could react to it by waiting for it to come out first. So right now the volatility that we're seeing here, once again, is probably not due to the news release, but most likely due to just the waiting of to get out of the way. So I'll have to make this one a no trade call because there's really no reason to jump in, and without a strong fundamental reason to jump in on a trade, it is better to stay out. So everybody, we're staying out. I'll see you guys tomorrow for the new home sales data, and that will pretty much wrap it up for the week. So have a good one, and I'll see you all later.